Welcome to the Capital News. I am your host, Alex Corritis. Today is June 18th, 2019. Thank you so much for joining me. I'm doing this podcast a little earlier than usual, so I'm not going to be able to give you any type of late-breaking news that might transpire later this evening or might transpire and move over to the Asian markets like I'm usually able to. Doing some traveling early tomorrow morning, so I wanted to make sure I got to this because today was a big day on Wall Street, also on the European front. I anticipate that will probably carry over to the early morning Australian and Asian market trade, but we'll have to wait and see what transpires there. We also know that the Federal Reserve is set to meet tomorrow to conclude their two-day meeting on the Federal Open Market Committee, the FOMC meeting, where they are going to make a determination on the federal funds rate, pretty much setting the price of capital. So everybody is waiting on pins and needles. Again, we said this is just a ridiculous notion. We say that here all the time at the Capital News because it is. This is not a free market capitalistic system. So anybody who claims that it is just doesn't know what they're talking about. When you have a handful of individuals sitting around a big wooden table determining the price of capital, you got a problem. And we've had a problem here for quite a while. That's why there's so much malinvestment, people being pushed further and further out onto the risk curve, meaning people are going to take bigger risks than they otherwise would have. But that's the signal that they get from not only the Federal Reserve, but central banks the world over. So there's a lot to get to today, so let me get started here. It's going to be a lot of data and a lot of numbers being thrown around because the title of today's episode is Easy Money Mayhem, and every market is being affected. We have stocks being affected. We have bonds being affected. Obviously, we have the options markets being affected. We have the currency markets being affected. What direction it will ultimately settle in is anybody's guess at this moment because this market is trading pretty much on headline news. It wants to continuously ignore the fundamental data. So we live in the world of Oz. This is easy money mayhem. So the S&P closed up 28 points, representing about a 1% gain for the day. The Dow gained 356 points, representing a 1.4% gain. It was north of $400 points at its apex today. The NASDAQ continued its ascent, gaining 109, representing a 1.4% increase. The Russell 2000, the small cap index, gained 17.5 points, representing 1.1%. The Dow Jones Transport gained 122 points, representing a 1.2%. So if this is, again, a forward-looking indicator, then we might be in for a bigger move to the upside, but we're going to have to pay attention to everything because this thing has been turning on a dime in both directions. The New York Stock Exchange gained 134 points, also representing a 1% increase for the day. Oil, despite yesterday, where we were looking at, I guess, presumably, the data, the global economy, that picture, we had a muted day in oil yesterday, but not so today. The price of WTI gained 4%, sitting now at $54.17 a barrel. Meanwhile, Brent now sits at $62.28, representing a 2% increase for today. This is on the back of what we're going to get to here in a little bit regarding some tweets from the president, no surprise, and some statements from some central bankers. Gold is now testing that $13.50 an ounce mark. It's now sitting at $1,349 an ounce. Silver is flirting with $15. It's now at $14.99 an ounce. It gained 1% for the day. The U.S. 10-year Treasury whipsawed back and forth today, given the comments from the president and from the ECB, the European Central Bank, and it is down 1.25% for the day, now sitting at 2.06%. 2.06%, representing a low we have not seen in over a year. I believe September of 2017 was the headline I saw earlier. The VIX is down another 0.75%, now sits at $15.24. Some other forward-looking indicators that we've been paying attention to as of late. I'm going to continue with my ramble here with all of these numbers just because I'm trying to paint a vivid picture for what took place today. Again, easy money mayhem, markets moving all over the place. Copper gained 2%, now sitting at $2.71. Aluminum is still flat. Lumber, however, continues its massive ascent. It gained another 4.5 percentage points today, now sits at $410 per 1,000 board feet. Now, ladies and gentlemen, I really suggest you take a moment to go on Google and to try to find the price of lumber and what it has done, just to look at it graphically, we have seen nothing but a straight up vertical line for really the past month. I believe the monthly gain so far is north of 20%. If we are to assume that lumber is a forward indicator and that the stock market is going to follow it, we may very well see a melt up. That is that's somewhat indicative of what the lumber market is telling us if we just look at that piece of the puzzle alone. Again, I do not advise looking at a single piece as the end-all be-all, because we did have lumber making new lows only about a month and a half ago, below $300, and most definitely flirting with where it was in the third and fourth quarters of 2018, but we did not see the market sell off to those lows. So is there a disconnect? What's going on? Or is it simply the easy money mayhem? Has the narrative switched? Is there just nothing but liquidity making its way throughout the entirety of the global financial system? This is something we're going to have to pay attention to. Interestingly enough, yesterday we had that conversation about $10 trillion in negative yielding debt. I've been meaning to give that podcast and that talk for a while, but given everything that has been coming through, I just kept putting it off. Now, news update on that one. Only one day later from the day we do the podcast, which has happened in another instance. The global markets now are sitting closer to $12 trillion in negative yielding debt. Yesterday we were talking a little bit north of 10. Now it's nearing the $12 trillion mark. And this is because governments the world over are continuing to put out more debt out there, and it's yielding a negative return. That's what it's doing. Again, particularly in Japan, in Germany, throughout the Eurozone, really. This is ridiculous. This is ridiculous, and there is seemingly no end in sight. How much longer can this continue? Well, if everybody wants to continue to believe that this party can't continue, I guess it will until it can't. Being able to predict that moment would make us all multi-millionaires. Unfortunately, I don't have the crystal ball to give you guys that advice. So you just have to be prepared. You have to be diversified. Everybody's different. If you have a long-term investment horizon, then stay invested. Continue to dollar cost average. But also build cash, because again, this thing will pull back. The more they inflate this market, the more distortions they create, the worse the crash will be. And again, referring to yesterday's podcast and President Trump's tweet in regards to, well, if one of these lunatic 2020 Democrat contenders win the 2020 presidential election, we're going to see the biggest market crash the world has ever seen. Again, is this just a statement? Is this a threat? Does the president actually have his finger on some sort of button? Is he manipulating these markets? Because we know from last year, he sent the plunge protection team to say everything's okay. He sent the Secretary of the Treasury out to the plunge protection team, the largest banks on Wall Street, and said everything's okay. There's no problem. And this is in the midst of that 20% bear market correction in the fourth quarter of 2018. And then he said, buy the dips. Buy the dips. He didn't tell everybody to sell short and make money on the downside. He didn't tell everybody, get out of the market, it's a top. Protect, preserve your capital. No. He didn't tell you that, but he told you to buy the dips. And ever since, we continue to see this, I believe, to be market manipulation, because the president most definitely has a fascination, and I would even call it an obsession, with the performance of the stock market. He references it all the time in interviews, on little speeches he gives to the media, little mini press conferences. He tweets about it all the time, and there's just no end in sight. So when is he going to tell everybody, you know what, we've peaked, you got to sell? Is he going to do that? That's the important question, because again, this goes to the whole question of credibility. He'll tell you to buy the dips, but he's not going to tell you to sell the top. That's not good for me. It's not good for me at all, because I think if you look at it from the grand scheme of things, to me, this goes back again to the whole question of credibility and the cult of personality. And, I'm a Republican, he's a Republican, so it's okay. Or I'm a Democrat and he's a Democrat, so as long as he's doing it, it's okay. This is why we have $23 trillion in debt and growing. This is why we don't change anything structurally. Because, as long as it's my guy, as long as it's my team, as long as it's my side of the political aisle, then everything's okay. Well, that's clearly not true. But that's the environment we find ourselves in, because nobody is questioning this president on these tweets. Everybody just sort of says, well, this is what he does. Is a tweet going to change the headlines? Is it going to make the markets crash? Is it going to make the markets take off? That's not what the job of the president is. It just simply isn't. So again, is the president giving information to somebody prior to his tweets? Because he knows what his tweets are going to do. He has nothing but ample evidence to know if it's something positive that these markets are going to rally, which is exactly, again, what we saw today. It may not be packing as big a punch as it did earlier this year, but it still packs a pretty big punch. And what am I talking about? I'm talking about the president tweeting out earlier today that he had a very good conversation with President Xi of China, that these two gentlemen are going to meet at the G20 meeting at the end of this month. And they are going to hold extended meetings and extended discussions. And in the interim, both of the sides, both of their teams are going to get together beforehand to talk some things out. Now, this is good. Yesterday we were talking about, it was speculation, which anytime I'm really throwing out speculation, I make sure you guys understand that. It was all speculation as to what was going to happen. We also said we hoped that these two gentlemen would get together. We want some sort of resolution. The likelihood of there being a resolution still, in my mind, lingers. I don't think that it's going to take place. Because if China is really making out to the degree that the president and his administration believes that China is making out, then why would China make those concessions? Why would they just simply say, okay, we're done. We're not going to keep doing these practices anymore. It could happen. It could definitely happen. I just am very skeptical of the matter. But nevertheless, the president is out there. He's saying, look, we're going to meet. We're going to continue these talks. And we're going to see what happens. And, in all honesty, that's all you can do. But we were strung along for several months, from pretty much December of 2018 to the beginning of May of 2019. The president himself or a member of his team would come out and make a statement publicly, or they would make an official statement, or they would tweet and say, you know what? Everything is going brilliantly. As everything is fantastic, we're going to have a fantastic historic deal. And what happened at the beginning of May? Nope. According to the U.S., the Chinese got up and walked away. They were reneging on the deal. And then if you read the Chinese media, they said the opposite. The U.S. stepped away from the table and was reneging. So, it's a he said story. Who are we to believe? This all goes right back again to the question of credibility. Don't come out and say anything until you have something. Because if we play this little game of the boy who cried wolf, the president of the United States is going to lose a lot of credibility, if not all credibility. He already is not believed by half of the country. The Democrats, the anti-Trumpers, already do not believe this man has credibility. Why would he risk losing his entire credibility from people on the right and people like me who voted for this president thinking he was going to do many different things than what he is currently doing? And of course, front and center, we're talking about the Federal Reserve and how he has been handling the Federal Reserve. He's been attacking them, not from the manner in which I believe the president needs to attack them, saying it needs to be abolished, that they cause these bubbles, they cause this malinvestment. It has been a wealth transfer from middle America to the upper echelons of society. Again, and I always stress this because it's important, I am not a class warfare guy, but when you have these fraudulent and flawed economic, monetary, and fiscal policies, I got to cry foul on it. I got to call them out because this is a problem. It's a huge problem, and most people are not aware of this. The president spoke of this when he was the candidate. That's why I voted for him. Now he wants the Federal Reserve to cut interest rates and to embark on another round of quantitative easing. The same policies that caused this mess. I can't support that. I will not support that. I'm not going to do it. I'm a libertarian. So right, left makes no difference to me. Republican, Democrat, I'm looking at the policies. I'm looking at the actions. I wanted to believe the president was going to go after the Federal Reserve. Now he wants them to embark on the same policies that caused the mess. It makes absolutely no sense other than the fact that the president wants to make new records, and he's more worried about the numbers looking good than he is the structural issues facing this country. He doesn't even talk about the structural issues. You never hear him talk about the national debt. He'll blame Obama and Biden. He'll say he needed to rebuild the military. Seriously? Trillions and trillions of dollars being spent on the military-industrial complex, on wars the world over? I mean, if he honestly needed to rebuild the military, then people should be in prison. Where did all that money go? If not but for President Trump coming in to spend $2.1 trillion over the first 3 years of his administration to defense, where was all the money going? And then we got that Three Stooges film that we saw the other day that might be getting us into war with Iran. Hopefully that's not the case. $700 billion a year, and we got black and white footage that's grainy at best, saying that the Iranians were taken off a mine on the Japanese vessel over there in the Gulf of Oman. I mean, give me a break. Who's believing this crap? Serious question. So that's where we are. The president continues to play these games. Now, is this a coincidence? I don't believe it is, because we really don't believe in coincidences here at the Capitol News. But we had a story break today out of Bloomberg. The White House looked at the legality of demoting Chairman of the Federal Reserve, Jerome Powell. This was back in February. That the White House looked at the legality of demoting Jerome Powell, the Chairman of the Federal Reserve. You think that's a coincidence that that came out the day that the Federal Reserve is meeting? And tomorrow they're meeting on Wednesday, and they will give us their conclusion as to what they are going to do with interest rates and give us a forward-looking statement. You think that's a coincidence? It is not a coincidence, because this is the president's MO. When the Federal Reserve is meeting, he sends out tweets. He makes comments. The Federal Reserve should cut interest rates. They don't know what they're doing. They're messed up. Jerome Powell doesn't listen. They have no feel for the market. They got to listen to me, Trump. This is no coincidence, ladies and gentlemen, because this allegedly took place back in February that the White House was looking into this. It's June. We have a Fed meeting. And this just happens to come out. Excuse me. I don't think so. I don't think that's a coincidence. I think this is being planned. This is being orchestrated. Is it really going to make any difference as to what the Federal Reserve does? No. But this is a narrative that the president is playing. Again, because he's boxed himself in, and now he's trying to box in the Federal Reserve. So he can blame the Federal Reserve if and when this market and the economy turns south. Again, the president could have avoided all of this by telling the truth, by saying, I was elected to drain the swamp. I believe that's what I'm here to do, and I believe I can do it. It's not going to be easy. It's going to be very difficult, in fact. Trillions of dollars. Very powerful people. Very corrupt people. This ain't going to happen overnight. This ain't flipping a light switch. It's not a snap of the fingers. This is going to be a long, arduous journey, but we're going to do it as a country. And we're going to go after the Federal Reserve because that's at the heart of the swamp. All of this money manipulation, all of this printing, all of this malinvestment, it has created bubble after bubble after bubble. Inflation, malinvestment, pushing people further out on the risk curve. All these chickens are going to come home to roost. And you, the American people, the average man and woman, are going to pay for it. It's going to be another huge wealth transfer the likes the world has never seen. But here's how we're going to go about it. He didn't do any of that. He didn't do any of that. He criticized Obama and Biden. He said the economy was in a bubble, the stock market was in a bubble. Government numbers were inflated, they were distorted, they were fake. But now he's president, and everything is just A-OK. Right back to it. Well, I'm a Republican, he's a Republican, that's my guy, he can do no wrong. Same thing people said when they were Democrats and they had Obama in there. I'm a Democrat, he's a Democrat, that's my guy. $23 trillion in debt and growing. Anybody care? You fiscal conservatives out there who are listening? You care about trillion-dollar deficits? Or is it okay because your guy's there? Serious question, isn't it? What else do we have taking place? We had Mario Draghi, the president of the ECB, out earlier making statements saying that the European Central Bank is standing by, ready to cut interest rates if we have to. Of course, we already knew this because this is what they've been saying for months. Yet the markets still love to hear it. Whisper sweet nothings into their ear. They absolutely love it. And this caused a response from none other than President Trump himself, making a couple of remarks on Twitter today saying, look, The ECB is ready to act. It's causing an unfair devaluation of the euro against the US dollar, giving an uneven playing field against the United States of America. He's not criticizing the ECB, he's criticizing the Federal Reserve. He's saying, look what they're doing. They're trying to help out their country. They're trying to help out their people throughout Europe. Come on, Jerome Powell and company. Get your act together and make it an even playing field. Of course, this is absurd, but that is his argument. He is trying to box them in. He is trying to lay the blame at somebody else. He'll take credit for all of the quote-unquote good numbers, but it's somebody else's fault when it goes down. I told you, look, I made statements. I have tweet. You can look at the record. The Federal Reserve doesn't want to listen to me. What else do you want me to tell you? I mean, you got to give it to him. He is doing a masterful job at blaming this on the Federal Reserve if and when this market does turn over. So you got to give the president some credit there. He also made remarks regarding the DAX, which is the German market, because it rallied 2% today. And let's look at some of that data here as I'm talking about that. So let's just go right through it. Excuse me one second. So we have the FTSE, that is the English markets, the UK markets, gaining 1.25% today. Again, the DAX, the German markets, gained 251 points, representing a 2% gain. The CAC 40, which is the French markets, gained 2.17%. The Italian markets gained 507 points, representing a 2.5% incline. The Spanish markets gained 1%. Now, will this continue tomorrow? Anybody's guess, because we got to wait to see what happens with the Federal Reserve. Usually markets are on pins and needles, which is what we were anticipating yesterday. And they were on pins and needles, so that basically all I'm saying is they weren't going to make big moves one way or the other. However, with the ECB coming out and saying, yeah, we're ready to be dovish again, no problem, no ifs, ands, or buts about it, we're ready to do it. And with the tweet from Trump saying that, yeah, we might continue, we're going to have a meeting. We're going to have a meeting at G20. That's been scheduled. U.S. team, Chinese team, they're going to start talking before we meet in a couple weeks. So we're going to get something done here. At least to talk, I should say it that way. Not that we're going to get something done, meaning a deal, but we're going to talk. Everybody wants to cling to hope, think this is the best thing ever. We're going to have to wait and see. Again, I hope that we can make a deal, that we can do something that is beneficial to both sides, definitely the U.S. side. But again, hope is not a strategy. But that's all these markets are clinging to right now, because if you look at the data, it's still not that great. We had that New York State Empire Index yesterday hit a record low. We have mixed housing data, but most of it is still either downward sloping or tilting to the negative side. So there's still a lot of things that are up in the air and a lot of things that are pretty definitively looking bad. Okay? And a trade deal, I'm sorry, just isn't going to fix it. Pumping more liquidity, more counterfeit dollars and euros and yen and Aussies into the system isn't going to solve anything. It's just kicking the can further and further down the road. But evidently, everybody loves kicking the can. So we're going to have to see what happens. Not that I want you to kick the can. I want you to be around for a while. Obviously, off of that euphemism. Now, what else do we have to look at here today? I think that's probably it. We covered a lot in a pretty quick time here. I mean, I know I like to keep them around 20-some minutes, and that's right where we are. I mean, I don't know what's going to happen within the Asian markets. Like I said, I'm traveling, so I'm not going to be able to keep you guys posted on that overnight. But, I mean, we're going to see what happens. This thing can whipsaw any which way, to the upside, to the downside. I mean, if you're in the currency markets, again, you've seen some whipsaws there. Again, the president was making reference to the euro, to the U.S. dollar, following President Mario Draghi's statement. So these are just things you got to pay attention to. It's anybody's guess what the Federal Reserve is going to do tomorrow. There's smart people on both sides of the trade, which is always the case. Some people think the Federal Reserve is going to sneak in another rate cut tomorrow. I think that would be ultimately a surprise to the market, because there really is only about a 20% probability that the Federal Reserve will cut interest rates tomorrow. I think they still have enough data points to point to that says, look, we're meeting our dual mandate of full employment and stable prices. 3.2% GDP in the first quarter. Stock market near all-time highs once again. So what's the need for them to cut interest rates, especially when the ECB is ready to do it, when the Reserve Bank of Australia just did cut interest rates a couple weeks ago, and they just signaled, like we were saying yesterday, that they're going to do so again, that they're standing ready to cut interest rates once again. We know New Zealand did it. I'm telling you, I'm predicting that the Canadians will paint the same picture. Again, Bank of Japan is always ready to print money. Same thing with the People's Bank of China. Any stimulus measure they want to do, they can do it. It does not mean it's going to work, just like it doesn't mean it's going to work here. But you can have a melt-up in the stock market. And at the same time, and I don't like talking out of both sides of my mouth, but this is what happens when you live in the financial world of Oz. This is what happens when you live in an environment of easy money mayhem. You have to talk out of both sides of your mouth because you don't know what's going to happen. This is unpredictable because we've never been here before. $12 trillion in negative yielding debt. 12 trillion. We can't even fathom how big of a number that is, the distortions that is causing. What happens when that chicken comes home to roost? How bad, how devastating is that going to be to the financial sector and everything else that splinters off from it? Be prepared, ladies and gentlemen, is all I can tell you. Be diversified, build cash, wait for this thing to ultimately come tumbling down and take advantage of the sell of a lifetime. That's all I can tell you. Thank you so much for joining me. I hope to be back tomorrow. Stay tuned, stay aware, be vigilant. This is the Capital News. I am Alex Corritis. Godspeed.